Picture this. You're at a pub quiz, surrounded by friends, laughter, and the clinking of glasses. The energy is high, and everyone's eager for the final round. The last question pops up. What's the safest investment on Earth? The room goes quiet as teams huddle, whispering their guesses. Without a second thought, you scribble down U.S. government bonds. It's the classic answer, the one everyone expects. For decades, that answer has been rock solid, the foundation of the global financial system, trusted by investors everywhere. But then, in October 2025, something unexpected happened that shook that trust. The U.S. Treasury tried to sell $119 billion in bonds, expecting the usual rush of buyers. But this time, the world hesitated. Big investors, pension funds, foreign governments, and major banks didn't jump in like before. They paused, weighing their options. The government had to sweeten the deal, offering higher interest rates just to attract buyers and keep the auction from flopping. It wasn't a full-blown crisis, but it was a clear warning sign. Confidence in America's IOU was starting to crack. To most people, a shaky bond auction sounds dull, maybe even irrelevant, but in reality, it matters more than you think. That hesitation was the world's way of saying, America, we need to talk about your spending habits and growing debt. The U.S. has been piling up debt for years, borrowing more, and now lenders are starting to get nervous about being paid back. This wasn't a Hollywood disaster, no explosions, no dramatic music, just spreadsheets, trading floors, and a sense of unease. But it forced the world to ask a once unthinkable question. What if people start to lose faith in America's ability to pay its bills? The answer could change everything. So, what's a government bond? At its core, it's just an IOU, a simple promise to pay. But unlike the IOUs you might scribble on a napkin, these are issued by the US government, and they come with a reputation for reliability that's unmatched in the financial world. The US borrows money by selling these IOUs, Treasury bonds, to investors, promising to pay them back with interest. Investors range from everyday Americans to massive foreign governments, all trusting the U.S. to keep its word. For decades, these bonds have been the world's safest asset. They're the gold standard for security, a place where people park their money when they want to sleep soundly at night. Why? Because the U.S. can always raise taxes or print more dollars to pay its debts. That power makes default seem almost unthinkable. The dollar is the world's reserve currency, so there's always demand for U.S. bonds. Central banks and investors everywhere need them to keep global trade and finance running smoothly. That's why default has always seemed impossible. The world counts on the U.S. to pay its bills, no matter what. U.S. bond yields set the benchmark for all other interest rates. Mortgages, car loans, business loans. When Treasury rates move, the cost of borrowing for everyone else moves too. When the government holds a bond auction, it's more than just a sale. It's a test of global confidence in America's financial strength and stability. A strong auction means faith in the U.S. economy. A weak one is a red flag. Investors watch these results closely, looking for any sign of trouble. If investors start demanding higher yields, it signals rising risk. It means they want more reward for taking a chance on U.S. debt, and when that happens, borrowing costs go up for everyone. Families, businesses, and even the government itself. The whole financial system orbits around these bonds. They're the invisible gears that keep the global economy turning. So, when confidence wobbles, the effects ripple out to every corner of the economy, impacting jobs, investments, and even day-to-day life. That's why the October auction mattered. It wasn't just another financial event. It was a moment that could shape the future of the world's most important IOU. Why did investors get spooked in 2025? It was a perfect storm. First, the U.S. national debt soared past $37 trillion. That's a staggering number, enough to make anyone nervous about how much more the world can absorb. Second, inflation fears lingered. Even as prices cooled, investors worried that more borrowing could reignite inflation. If inflation outpaces bond yields, investors lose money. The Federal Reserve had hiked rates to fight inflation, but now faced pressure to cut them, risking either renewed inflation or recession. Uncertainty made investors demand higher yields for long-term bonds. Third, demand for U.S. debt was shrinking. Foreign buyers like China and Japan, and even the Fed, were pulling back. Geopolitical tensions and reduced Fed buying meant fewer guaranteed customers. The government was selling more debt just as big buyers stepped away. That's why the October auction flopped. It was a classic case of too much supply, not enough demand. You can't ignore politics in this story. In 2025, President Trump publicly pressured the Federal Reserve to cut rates faster. The Fed is supposed to be independent, but that trust was eroding. The administration moved to stack the Fed with loyalists, raising fears of political interference. Investors worried, is the Fed still in charge, or is the White House? A politically controlled Fed could mean low rates and more money printing, fuel for future inflation. That's a nightmare for bondholders. The weak auction reflected not just economic, but political risk. Investors demanded higher yields as insurance against instability. The bond market was sending a clear message: stop playing politics with the Fed. After all this, you might think the US is doomed. The headlines are full of warnings about debt, political gridlock, and economic uncertainty. It's easy to feel like America is teetering on the edge, but here's the twist: everywhere else looks worse. The global economy is facing its own storms, and many countries are struggling even more. Investors always compare, and in 2025, America is still the least risky option. When they look around the world, the US stands out as a relative safe haven. France? Political chaos, massive debt, and no budget surplus in 50 years. The government faces strikes and protests that paralyze the country. The UK? High bond yields, inflation, and political turmoil. Investors worry about the pound and the country's ability to manage its finances. Both are seen as riskier than the US. Even with America's problems, Europe's challenges are even more daunting. When trouble brews abroad, money still flows into US treasuries. Investors seek safety, and the US remains their first choice. That's why, paradoxically, US bond yields sometimes fell even as deficits rose. The world's uncertainty makes American debt look attractive. America's economy is vast, its institutions mostly stable, and the dollar remains king. The scale and resilience of the US system are unmatched. Relative safety keeps the US afloat. Even when the waters get rough, America's foundation is stronger than most. Even with $37 trillion in debt, the US is still the world's lender of last resort. When crisis hits, everyone turns to the dollar. Investors may grumble, but they keep coming back. The alternatives just aren't as appealing or as reliable. The global laundry basket is dirty, but America's shirt is still the cleanest. In a world full of uncertainty, the US stands out. For now, that's enough to keep the system running. The world keeps spinning, and America remains at the center. But it's no guarantee for the future. The cleanest shirt can still get dirty if no one's careful. Why should you care about a bond auction? Because it hits your wallet. Government bond yields set the baseline for all borrowing costs. When yields rise, so do mortgage rates, car loans, and business loans. A 1-point jump in mortgage rates can add hundreds to your monthly payment. The era of cheap money for home buyers may be over. Higher borrowing costs ripple through the economy, affecting everything from car purchases to small business growth. Even your credit card rates are influenced by these trends. And there's a long-term cost. The government now spends more on interest than on defense. That's money not going to schools, roads, or healthcare. If borrowing costs keep rising, future governments face a tough choice: raise taxes or cut services. The bond market is sending us the bill for decades of overspending. And now, everyone pays. So, what's next? The $119 billion bond wobble was a wake-up call. Expect more volatility as investors weigh inflation, politics, and debt. Watch future Treasury auctions. Weak demand and rising yields could signal a new, tougher era. Washington will face pressure to fix its finances. But that means tough choices. Spending cuts or tax hikes. If investors lose faith, interest rates could soar, forcing the government's hand and risking recession. For families, this means higher borrowing costs and tougher decisions about homes, education, and business. The national debt is no longer abstract, it's a direct threat to your prosperity. The story of 2025 is about trust, the world's trust in America's financial stability. That trust is shaken, but not broken, yet. The US still has big advantages, but trust is fragile. The bond market has fired its warning shot. Is anyone in power listening?